Unfortunately, the result of this here, Chris, is that it does subdue consumer demand as well as the appetite for investment, which therefore subdues economic activity in the country.
Inflation in South Africa is at its highest point since January 2017. According to Stats SA data released last week, inflation in May hit 6.5%. Joining me to unpack the implications of the high inflation rate for consumers and businesses is senior analyst at the Center for Risk Analysis, my colleague, Bheki Mahlobo. Bheki, as we explained in this week's Risk Alert in more detail, what are the main drivers of the high inflation rate?
Yeah, Chris, the inflation rate of 6.5%, what that actually means is the erosion of the purchasing power of ordinary South African households. It means that it'll be more expensive for South African individuals to go about their daily lives, such as going to work, buying groceries, and basic necessities. Now, the reason for the increase in consumer inflation has been what's been happening from a global perspective on global trade, as they have been disrupted coming off the pandemic, as well as with recent lockdowns in China impacting global supply chains. That has also resulted in the increase in fuel price. Chris, right now, the petrol price is up almost about 25 rands to 1 liter. And if it goes beyond that level, it means it will be 50% more expensive for motorists to go to work, 50% more for trucks to move goods around the country, and 50% more for public transportation, as well as low-income households to use public transportation, resulting in taxi fees to increase in July. Unfortunately, these are quite trying times here, Chris, as income levels have largely stagnated over the past 10 years.
In terms of other effects on consumers, especially lower income consumers who are under a lot of pressure given our low growth environment, the Reserve Bank, for example, only projects growth that are at under 2% for the next 2 years. For those consumers who are under more pressure, where are they going to see the effects in terms of higher product prices? What products are of most importance to them?
They're going to see this effect on their wallets, Chris. Yeah. Looking at individual food items, you see overall inflation is about 6.5%, but the individual food items, such as cooking oil, is up close to 30%. Paraffin, as we're currently now experiencing load shedding, as some households do not even have access towards electricity, particularly in rural areas in the country. They use paraffin in order to light their rooms and so forth. Paraffin is up close to 30%, as well as that of petrol. These individuals feel the pinch through their spending power, which is unfortunately declining over the past few years. And as we mentioned there, Chris, is that the economy is not going to see high levels of economic growth, largely due to the policy environment that the country finds itself today. And unfortunately, that means that income levels are going to continue to stagnate. The important risk here, Chris, is that once you start to have an environment of high prices mixed with high poverty levels in the country, with unemployment rate, with the number of people unemployed in the country, about 12.5 million South Africans that are counted under the expanded definition, you therefore have an environment that is very susceptible to a rise in protest action, violent protests for that matter, as well as political instability.
And Bheki, just to put South Africa in context with maybe emerging market peers, such as maybe Brazil or Turkey, we know that the Turkish president has some interesting ideas around interest rates and monetary policy, but how do we compare maybe versus other emerging market economies with how inflation is going here?
Chris, how South Africa compares basically to emerging markets is that South Africa has lower inflation levels compared to these other emerging markets, also in the developed world, in fact. Over the past 10 years, generally, South Africa has had higher inflation levels compared to developed world, but now the developed world has outstripped South Africa when it comes to inflation levels. And that's largely due to the hard line that the South African Reserve Bank has held during the pandemic. Sure, we did cut interest rates, but our interest rates did not go to zero as what has been seen in other countries around the world, such as that of the United States, as well as that in Europe. That has led to inflation, to South African inflation levels to not be as high as they currently are. The main driving force for South Africa's inflation is what's been happening outside of South Africa, unfortunately, when looking at the fuel price.
In terms of monetary policy, the Reserve Bank has been fairly predictable and stable with its monetary policy, trying to keep a cap on inflation without just pushing South Africa into a clear out and out recession or even depression. But how far can monetary policy really take us? What other reforms would you advise government to look at implementing that could at least protect South Africans from some of the worst effects of inflation? Of course, we're in a global context and we're subject to global forces, but governments still have some tools at their disposal to help lower some of the worst effects of inflation.
Yeah, Chris, the main way in which the South African Reserve Bank controls inflation in South Africa is through its monetary policy, through the repo rate. And now with inflation above its target of 3 to 6%, it suggests that the South African Reserve Bank will continue to hike rates throughout the course of this year. Now, they do this in an attempt to subdue consumer demand for credit, such as that of car vehicle sales, as well as that of mortgages. When they increase the interest rates of these particular items, consumer demand less of them, therefore by trying to subdue consumer demand, as well as that from a business perspective, where borrowing in order to expand business operations will become more expensive. Unfortunately, the result of this here, Chris, is that it does subdue consumer demand as well as the appetite for investment, which therefore subdues economic activity in the country. And this is in a context where the country has experienced a decade-long of economic stagnation, suggesting to us that 2022 GDP will be lower than that of 2021. Now, you asked what are some of the ways in which the country can recover from the environment that it finds itself in today, and that's through policy. From a government policy perspective, we need growth, and that growth can only be achieved by implementing the reforms that this country needs that would see a rise in South African economic activity, as well as a rise in our employment figures, which are lower compared to 2019 levels. South Africans need income in order to bear the harsh times that are coming here, Chris, such as rising interest rates, as well as the inflationary environment that we find ourselves in today. This should be top of mind of policymakers in the country.
And finally, Bheki, just getting your thoughts on the path forward. Do you foresee the Reserve Bank, for example, hiking rates more aggressively, perhaps in July or going forward? Or, I mean, I think we can both predict high inflation throughout this year and into next year. But just in terms of South Africa's inflation rate and what the Reserve Bank might do, what are your predictions?
Yeah, there's a few indicators we can have a look here, Chris, as to what will the South African bank do throughout the course of this year. We already touched on the consumer inflation, and that's indicating towards an increase in rates in the country. The second one, and that's not often spoken about, is when looking at producer inflation, which is above 10% in the country. Once you start to see high levels of producer inflation, that is then pushed down to consumers. And producer inflation is still historically high, which suggests that consumer inflation will continue in its upward trajectory, meaning that the South African Reserve Bank will continue to hike rates throughout the course of this year. We do not only see this in South Africa, Chris, we also see this in the United States, where 2 weeks ago, the Federal Reserve Bank hiked rates by 75 basis points, the highest rate hike since 1994, and the ECB planning to hike rates in July. Now, once you start seeing these developed economies hiking their rates, it subdues their respective economies' economic performance, which then triggers a slowdown in global growth, having massive repercussions for a country like South Africa. So I suspect that throughout the course of this year, we will continue to see rate hikes from South Africa, as well as that from the rest of the world.
Now we turn it over to you, the viewer. Let us know in the comments below how you are experiencing the effects of rising inflation in your daily life. If you would like access to our weekly risk alerts, which we touched on at the beginning of the video, in which we flag and analyze upcoming risks in South Africa and the global environment, you can go to our website and become a member of the CRA. You can also sign up for our 30-day free trial if you would like to sample some of our work and then become a permanent member after that. Thanks very much for watching. Until next time, this is Chris Hattingh for the Center for Risk Analysis. Take care.